Friday, August 4th, market analysis, Stan Ehrlich. Good morning. A little late today, 10:40. Usually I'm about 45 minutes earlier than this. We start out with the stock market indexes and the spider in particular, and we've got a pretty good rally today, a little bit more than I would have expected. Are we trying to close a gap that occurred early this week first and then go down to 443 and close the gap which happened a month ago? Or are we still on the way down? And that's what I think, to close the gap from a month ago at 443, give or take a little. So I don't think we're going to get much stronger at all than today's highs. And the gap above the market created early this week, we're going to close on the way back up after getting down to 443, or maybe a little lower. It could come down to about like 438 or 437. But that is the general ballpark, possibly even a little lower. The downside correction I think we're looking at in progress, but we're up on the day 2.5 points at the moment. As you well know, that can change very radically, very quickly. So we might even end up closing lower. That would be something I would not be surprised of. Up 2.5 right now on the spider, and only 2.15 on the DIA, and the Qs are up 2.75, all of them 2. Not much, frankly. All right. So I'm looking for a dip to close a gap from a month ago. And then I'm looking for a rally into total new high ground for the trend. Okay, DIA. There is a small gap to close there around 350. And that would not surprise me if that got closed on the same day, even the same hour as the spider closes its 443 gap. We'll see how the timing comes out and if it happens at all. But that's exactly what I'm expecting. But there's a chance, because there's nothing else there besides that little gap, that it could drift off even more to maybe 345. But again, somewhere between the gap closure and maybe support at lower levels in both spider and or the DIA, I expect it to stop declining and turn up and make a new high for the whole trend. And the same thing applies to these QQQs, which have already started to touch support. But the gap in the Qs of a month ago is a little bit below that support. So we're bouncing on the Qs off of a little support that's almost exactly yesterday's lows. And there is a small gap a little higher than today's high to close, also like the spider. So which one comes first? I still think the one on the lower end gets closed. And again, maybe a little lower than that. And then up we go, and we just keep going up. And the Russell 2000 is not quite the same. The low yesterday was just the same as the low of the bearish engulfing, which didn't work exactly the way I wanted. There was a small loss involved in that trade, or signal, I should say, and trade. But I still think it's trying to have a top of some sort and coming back down to probably 189, 190 to test support, and then turn back up and make a new high for many months, going back, a year, when that happens. And that's not that far away. Gap closures are not underneath the market. I'm still pretty bullish on these indexes completely. No ifs, ands, or buts about it. Now, interest rate futures. We have the bond market. Oversold conditions the third day. Today's low is just a little bit lower than yesterday's low, but we are significantly higher on the day, 1.5 points, basically. And we are very close to yesterday's high. If we can rally just a little bit more and rally a tick or more above yesterday's high, we will have a green bullish ER buy signal, similar to the one that we made on June 16th of 22. And that led to a really nice 2-month rally, which led to a bearish engulfing ER sell signal. So there's a chance we're going to have an official buy. It's got to turn green before the close. It's got to have a higher high than yesterday before the close. Next chart. And I should comment about the 88-day cycle low, which of course was on July 10th, close to a month ago, and almost perfect. It didn't go up too much or for very long in this particular cycle low instance, but it was still quite profitable. You would have been long, give or take, around 124.5 and out 2 or 3 points higher. That's not too bad in about a week and a half. Obviously, this cycle low was much bigger and better. This cycle low was unbelievably great, and there's no words to describe how great that one was. It even has a green ER buy signal as well. Okay, there you go, more futures. And the 10-year notes. Let's get it up here full screen. That's the bonds again, sorry. Here we go. The 10-year notes, ladies and gentlemen, has a bullish engulfing ER buy signal. It got oversold for the first time today. Around the low of the days, it was oversold. It has a bullish engulfing. We were testing previous lows for the trend. It made a new low and didn't want to stay there. Sometimes I draw the analogy of a ping pong ball being pushed underwater and let go. It just pops right back again immediately. And that's what we've got. So I've got an official buy signal on the 10-year notes, which implies both bonds and 10-year notes are going higher. We just don't quite have that green bullish on the 30-year long bond yet. But watch out, here comes the rally in interest rate futures, in my opinion. Crude, sell signal 2 days ago, didn't work. We rallied up to and a little bit above the protective sell stop, which is the yellow dots, and we have a small overnight losing trade. We are still in resistance. We are still recovering, so to speak, from overbought conditions. Even though it's making a new high, the indicator is not, and that does create what we call a divergence, and it is something that happens in top building and bottom building very frequently. Not that this is a major top, but it could be. Look how many times it's stopped in this ballpark price level and turned down, most of the time just to the beginning of the red zone. This time it could actually come down even more and break into new low ground. We'll see what happens. I'm still looking for a move down, even though the sell signal did not pan out exactly the way I was expecting. Next chart. You can say the exact same thing for the heating oil, unfortunately. Small loss, signal didn't develop. We are still overbought, and quite a substantial level too. Look at this. We have highs in the mid 90s for the RSI for the last 3 days. That is extremely overbought. I have to say, I'm expecting this market to turn down very quickly, very substantially, and immediately. We might have another bearish engulfing here. That would not surprise me. It doesn't look like it's going to be today, but it doesn't have to be. It can be within a few days after the overbought conditions, slightly on the way down, but often they are exactly what I like right there on January 24th to 23, the top of the rally. That's an example of happening a day or two after the high overbought or the highest high price overbought condition. So that might happen here. Next chart, natural gas. Neutral, sideways. I think it's topping out. It's not doing very much, very quickly, very boringly so far. It might come back up a little bit more, not too much to say. Next, gold, silver, platinum, copper. 2 sell signals in gold. They've worked great. The market dropped down, including today being the lowest low since the 2 sell signals, one of which is the high of the rally. This is exactly why I built the ER signals. So, is that it? Well, we came extremely close to oversold. We came very close to the previous lows support, and we have a bullish engulfing today. This would be green right now if we had gotten oversold, but we didn't quite. So it's a very close call to a bullish green buy signal. Keeping that in mind, I do expect a little bit of a rally. I'm not sure we're going to see new highs, but it would be expected to have a little bit more of a rally. Next chart is almost a bullish engulfing, almost oversold, but we don't have the actual bullish engulfing on silver. It had 2 sell signals, and it had the highest high for the rally as one of the first sell signal. So it worked great as well. Silver's provided some great signals here this year. We got the bottom of the break. We got the double top highs in both cases, which is unheard of. We got the sell signal a couple of days after it just crashed for a day. We got the bottom of the break. And then now recently we've gotten a recent high. Next chart, looking for lower levels in silver. Platinum, bearish, but all of the metals seem to want to pop back a little bit today. That looks like it's an outside up day, barely. But since we were not oversold almost, we don't have a green buy signal at this point. The actual oversold level was 26 something. So it didn't get to 25 or lower, which I need in order to get a green vertical candlestick or bar. And today's high, 931.50, and yesterday's high being 931.60 is obviously not a higher high, but super close. So almost oversold, almost a bullish engulfing, no cigar. Next, bearish engulfing a few days ago on high grade copper, dropped like a rock the next day. That was Wednesday. Bounced back somewhat yesterday, a little bit more today, but we're now down significantly. And I think we're on our way to new lows for about a week and a half. And we're on our way down to probably 3.6. And let's see how it gets there. Next stage down would be down to 3.5 and a half, and maybe even breaking out to the downside much more bearishly. Next, on the top, almost in soybeans, we had a great sell signal. Now, this might go down historically as a very broad, close or good enough example of what people could say is a double top. And it's only going to be the case if we start breaking below 1070. That is going to cause people to see much more clearly the likelihood of the double top. But so far, that's how these things start. Now, we did have had 3 sell signals in the last 2 or 3 weeks, and that's sometimes pretty powerful. I'm expecting it to get down to, excuse me, some support here at 1302 and 1280 area, and break below that, it would be very important. Then I would expect it to maybe come all the way down to about 1090. So from 1333 at the moment, there's a good chance, in my opinion, until I come up with something that looks very bullish, that it's going to stay in a downtrend for maybe a very, very long time. Soybeans, no signals lately. I'm sorry, soybean oil, no signals lately. A little rally today. I still think it's likely to be bottoming out, but this rally could carry a little bit further, maybe 63-ish, and turn down. It might even build a small toppy pattern. I'll talk about if it happens. Next, soybean meal, bearish engulfing. Wednesday did not pan out. We're stopped out, but it looks like, because we're lower in the day now after a new high, and also closing a gap, it looks like from earlier last week, late last week or early this week, late last week, that we'll probably be going south. So I'm bearish, but I haven't not much detail to say, except obviously the first decent support is at 365. Next, corn. We start breaking below 472, and we're not far from it, 10 cents. That could trigger a move below 452, which would be a major long-term bearish breakout. That was the low a year ago, and at the time for many months prior in the first place at that time. So we'll be seeing new lows in corn going back to February of 22. Quite a substantial year and a half backward. Major bearish. I know there's longer term support in that ballpark, so maybe the bear move or market would not come down super fast. and bounce around as it got down to maybe 288. Wouldn't be surprised. Going to take a while. Next, wheat. Already in progress of doing approximately the same thing. Previous lows are not holding on the average every couple of months. And any rally that has happened in general has been lower and lower and lower. And we're going to go back a couple of years. So been quite a while that this is happening. I don't see any changes. Next, on the top of the market, live cattle, got a sell signal. This is probably about as much as I would tolerate if I was a long-term trader, and I'm not, because it should top out here and not go up any further. I didn't even expect it to come up quite this high, but the high still, in retrospect, is a bearish engulfing ER sell signal. So we'll see if it turns down, which I'm kind of expecting right away. Might be by the end of the day, kind of doubt it, but on Monday. Next chart. Lean hogs, a little higher today. Didn't have the downside follow through I was kind of hoping for yet, but maybe Monday or Tuesday, Wednesday. I'm looking for lower levels for a month or more, and then a move down, probably in the ballpark of 72. Next, OJ. On the top of the market, we have a bearish engulfing ER sell signal early this week, and that would have been Monday in an extreme overbought condition, very low, mid-90s almost for our side. No surprise that we got a bearish ER sell signal. No surprise it was on the high day. That's what we love. Today's the first day that the market is rallying a little bit. Not a heck of a lot. Normal. I expect to see very soon, Monday, Tuesday, new lows for this move down and continue to work its way lower, probably in the ballpark of 270. Next, cocoa. Almost on top. We got a bearish engulfing, and it's starting to work its way lower. I think we might have gotten bumped out, unfortunately, at the rally high the next day of our ER3 short. Nevertheless, we do have a sell signal involved in what looks like a little bit of a top. I'm not saying it's a big top or super profound at the moment. This trend has been very strong, steady, stable for quite a while, and I don't see any change in that yet. It's a stair-stepping up market. So coming back to the bull trend line, give or take, 3,320-ish is very plausible and turning back up again. Next, cotton. On the high day, we got a bearish engulfing. It's working great. Looks like we could have a new low closing price, and we're very close to the lowest low since the sell signal. By the way, I do have to point out that the offer to go short for ER3 was sitting at 86.30. You can see that number in the right price column. The high of the day 2 days after the signal was 86.31, one tick from the high of the day. And I said one tick above our offer, meaning you're filled, meaning at the high of the day, meaning you didn't have a close that was giving you a problem so far at all. So far, so good. Next, sugar. I'm thinking it's going to come down to about 20. Not doing it very interestingly or very quickly. Minor new lows for a couple of weeks today. Probably a new low close. Chewing its way down. Okay, fine. Not that close to oversold, so more elbow room to the downside. Next is coffee. Basically bearish. Looking for a test of recent lows at 155 and not getting any signals at the moment. We didn't get overbought. Came close. That's about the best I can say. And we're back to the E-mini, which is still up on the day, a decent 2 points, but you can see everything has slipped a little. We're a little less than 2 points higher in 1 or 2 a moment ago in Spider. So with 2 hours and 2 minutes to go, we might keep slipping more. You guys have a great weekend. Thank you.